18th of August. Now, I want to break down the minutes of the Fed first. I think that's crucial for everybody to understand, and also to look into detail into what the Fed are actually thinking at this current moment. Okay, because as you know, US dollars it's a white it's traded around the world about on average about 66% of the time. So whatever decisions that's made by the Fed, it will definitely impact the rest of the currencies. So I think it's crucial to look into the breakdown and what the minutes are, what they're saying, to give an idea come September, what would be the next decision for the Fed, whether to raise rates or to maintain rates, and see. Okay. Now, the Fed minutes clearly stated that the Fed remains concerned about the inflation rising once again. In the last report, I mentioned that, like oil price going up and this kind of things, they do affect. And we have also seen the inflation from the CPI data proved to be sticky on a month-to-month basis. Okay. So we need to see a bit more, but and hope, the future prices can actually really do come down, and then that will help the Fed a bit. Feeling otherwise that we will have a second round again. And with this, I think the Fed would be looking into raising rates again for another 25 basis point, or either that or hold the interest rates for as long as possible. Okay. Now, in the last meeting minutes, right, it stated in the minutes that only 2 participants favored holding the rate steady in July, and the rest actually preferred the hike to continue its fight against inflation. Now, in the minutes, right, if you read it, what I see, they also showed that the rate hikes could be expected in the future unless the pace of economic conditions changes. Now, you can see it from this statement. In discussing the policy outlook, participants continued to judge that it was critical that the stance of monetary policy be sufficiently restrictive to return inflation to the committee's 2% objective over time. Okay, so that's one. And the Fed also stated its preference to ensure that the inflation dropped for good this time before it starts dismantling all its inflation reduction policies. They have done so, try to control inflation before, and then after that they think that it was successful, and they started changing the rates and making it everything easy again. That was in the 70s, only for inflation to come back and bite them. It almost happened early this year when the Fed thought that it was good already to start reducing the rate, from 75 basis points, start moving down, because they think the inflation is coming down, only to see inflation start moving up again. So they are really afraid of this, because as you raise rates higher, the room of maneuver for you is not much already. When you start push it down, and then let's say you reduce the interest rates, but the inflation starts going at a higher rate and you have to push it up again. Now, this creates a lot of chaos in the economy, and the Fed doesn't want this to happen. Okay, so it is interesting, okay, to see other things. There are other statements. One of the statements that we talk about in this particular area, where the preference to ensure inflation drops before they dismantle inflation reduction policies, is seen here. A number of participants judged that with the stance of monetary policy in restrictive territory, risk to the achievements of committee goal had become more two-sided, and it's more important that the economist's decision to balance the risk of inadvertent over-tightening of policy against the cost of an insufficient tightening. So they have to balance up also. But like I said, this already gives you a hint that they need to be very careful so that 1970 won't happen all over again. Now, at writing, the market does not expect any rate at the next meeting, as probability, any rate hike, as probability of a hike is in the 80s. Okay, because so no hike, 80%, so we don't expect anything. And the focus would be next week's Jerome Powell speech at the Jackson Hole Symposium. Now, this is a private party, I would say, where all the central bank heads are invited to have a meeting and discuss. And during that time, Powell will be giving a statement. Then we will also have an idea, what are his thoughts. So that is usually done during the weekend. Okay.